Hey chums, it's me, Chris. I'm here to do another cold read, which essentially means I'm going to look at a pitch deck that I've never seen before and I don't know anything about the company and say everything out loud that I think as both a VC and an angel to see if I would take a meeting after, or off the back of this pitch deck. So here we go. This is Leafr, I assume, the vetted marketplace for sustainability. Okay, now I'm actively myself building a company in and around this space, so good luck. Okay, I immediately see 24 slides. There's absolutely no way I'm going to read 24 slides because I'm trying to decide if I should reply to the email or say yes to the meeting or whatever. The stronger the introduction, the more likely I am to read all of the slides, but let's just assume it's hey, I met you at an event. Cool, let's send me a deck. Let's just assume that's the setup, which actually in this occasion it was. I'm not going to read 24, so I'm going to do a flick test. I'm going to go as fast as I can through the deck to find points of interest that just kind of just pop out to me, and then go back to the bits that I care about, because that's what I do. That's what a lot of investors do. Okay, here we go. A vetted marketplace for sustainability. Businesses are deadly serious about their commitment to sustainability. Bullshit. That's what their branding wants you to think. But why are 76.5 million businesses struggling to turn commitment into action? Because they don't have a budget for it. The ultimate sustainability bottleneck is the supply of skilled people. It's not. I understand. For fuck's sake. I'm a prisoner of my experience, so this might be true, or it's a quote taken out of context. From my experience, which is one of the issues I'm addressing, is sustainability is a general practice, has a bottleneck because no one values it commercially. Everybody knows it's a good thing, but there is no profit reward, or in most cases, there is no shareholder value in sustainability. Now, as Gen Z and Gen Alpha start to progress into their own kind of, mid-career point, which is another 20 years away, of course, then it will become part of the shareholder interest. But in the short term, between now and maybe the next 5 years, no, don't believe that. Problem: businesses have a growing sustainability skills gap. It depends what you mean by sustainability. It's such a catch-all word. Leafr gives companies access to sustainability knowledge and skills at a fraction of the cost. Fraction of the cost of what? Okay, I'm starting to lose credibility with this one. Incoming call. 1 second. Fucking spam. Anyway, AI cope. What the fuck is this? The right team and network. Former marketplace founder, Voice Pals. Now, I've never heard of Voice Pals, so this is what I'm actually going to do. Let's go Voice Pals. What was it? You need to enable... Okay, they haven't done their SEO. Voice Pal. Get Voice Pal. Okay, a marketplace for voiceovers. Whatever. Voice Pal. It takes too long. I don't know what Voice Pal is. I don't know what your expertise is. Former sustainability marketplace founder, Supply Compass. Okay, if you've done one in the past and you're doing another one, does that imply the one before was rubbish? Don't know. Don't care about advisors. Revenue generating since day one. Okay, all right. Now, this tells me it exists. That makes this slide really important. I want to see... I just want to see growth, really. New client. Now, what is a client? Is a client somebody who uses what I assume is some kind of app? Project revenue. Average project. Projects staffed. This is so ambiguous, don't care. Well, this matters because of the last slide. AI. Okay, I am assuming then the tool is some kind of chatbot that will give you some information on how to, engage in sustainability practices in your business, and then can pay you with people you can outsource certain pieces of work to. Planned, operational, vetted marketplace, 20% fee per project, plus 15% of first year's salary. You're an employment marketplace. You are a recruiter. I fucking hate those kinds of businesses. Sorry. And the reason I don't like them is because arguably investors will never get a return. They just don't. It's a services business. The multiple or the exit value is usually based on EBITDA. So if you're spending so much on other tech development, which then you're not really, if I go back to the team, there was no one here that was an expert in any form of AI, or C-level at Series A AI startup. That's infinitely more important than the marketplace stuff, because the marketplace doesn't exist yet. You're basically, it sounds like you're a recruiter and you've been earning some recruitment fees. We've acquired an unbeatable diverse network of specialists via a 4-step selection process. The market size. Okay. Fundraise. How much are you asking for? 600k. Revenues year 1. I assume that is the current year. Revenues 342. So you are going to 5x your revenue. I guess that's reasonable. You're going to make a loss this year. Why? What's the loss about? Is that because of tech investment? Is that net profit, gross profit? Because you're already trading, I expect that kind of sophistication or that level of maturity, financial maturity. Okay. Would I take a meeting? Yes, I would take a meeting, and I'll tell you why. I would take a meeting because there are 2 reasons. One, the fundraise size, it's not that big. And if we account for revenue in year 1, that means they've got roughly £1 million worth of working capital, which is pretty good. I mean, it's pretty good. And so that's the first thing. It makes me go, okay, they've made some money. It sounds like a recruitment business trying to move into, use basically Copilot AI, whatever they call it, as basically lead gen. That's what it kind of really sounds like. And I guess that's kind of smart. You're using these kind of tools to basically build a relationship, build some trust, and then say, hey, you need some talent? We got talent. So that's fine. I would meet them because I'd want to find out how and why they're going to go from a services company to a technology company. And the reason that's important is that as an investor, and I'm a venture investor, it's a very specific type of investor. It means I care about the value of the equity and that they are going to sell that equity, or I have the opportunity to sell that equity, in 5 to 7 years' time for a very large gain. As a services business, that won't be possible, or is incredibly unlikely to be possible. As a technology company, because they can scale in different ways, they end up using revenue as a multiplier as opposed to profit as a multiplier when it comes to an acquisition. It's more interesting. And the fact that they've done some stuff, I'd want to know what these really mean. So yes, I would take a meeting. I don't know if the founders are appropriate or relevant, but I'd take a meeting because there's clearly some work done. And I'm curious to know how this is going to go into a technology company. Excuse me. Coughing. Damn COVID. Anyway, that's my cold read. Hopefully it's helpful. Take care. Bye.